Click right in the middle with that little arrow. The middle, in the middle. Nope. Middle to the left, right there. Bam. Trade view. Now go on your YouTube. Go on your phone. Matter of fact, I'm going on my phone. I want to make sure I hear you. I want to see the different quality. So you way over there. You both go. I want to see that shit. You can all be able to get on. Oh, I'm on my phone right now. Here. From my account.
Mic check 1 2 1 2.
I don't even see
Boy in the back. Gonna do.
I don't even see nothing. Alright.
I talk loud enough. Y'all should be able to.
Problem is seeing it. They can't. Alright, so go back YouTube again. Click come on. It popped up now. Now go back. Go back to the left. Just explain quick. See what 8:30 open and respecting the
Alright, so what we got marked out here is the 7 a.m. highs, and I can make that a different color. So let's make that actually red. We got the 7 a.m. highs here. The highs after 7 a.m. The highest high at 7 a.m. which came in at, is that 903? Yeah, it came in at 903. And the 7 a.m. lows was actually coupled with the midnight open this day. So
hold on.
It's not wrong.
Yeah, the clip up. Outside, it didn't outside right there.
Oh shit.
Maybe because of the noise outside.
I can move close over there. Come on.
That's what I'm saying, bro.
Yeah, let me
no, but you need that.
I can move this over there. Nah, you keep
Oh,
it
yeah,
right
you're
there.
right.
Yeah, fine. I'm just sit right here. Easy. All right, so here we got the 7 a.m. The 7 a.m. highs, and we got the 7 a.m. lows, which is coupled with the midnight open today. This is Friday, by the way, the September 12th. So what we got was at 9:30, immediate sweep to the upside. Now, our drawn liquidity this day was kind of obvious. It was just up there. All-time highs was right here, this green line. Obvious drawn liquidity. We know when we get in proximity of all-time highs, it acts as a magnet.
That shit
So if you didn't know that, now you know. Good game for you right there. Write that down in your notes. When we close to all-time highs, you can expect for it to act as a magnet. Okay? Cool. So let's get back into this order flow. So if we looking for the drawn liquidity to be higher, what do we look for first? Well, we want to see some type of manipulation going in here. You feel me? So what we have here is we have a sweep on buy side here first. 9:30 opens, we immediately go up and we sweep this buy side. All this buy side that was here. This is the 7 a.m. high. And we sweep this buy side. All this buy. What we got now is a sweep, and then we displace back into the range. This candle opened up, came up strong, and then we sold off, back into the range. Right? So now what are we expecting? The market to move along with its manipulation move. Right? This is also known as a Judas swing. Your manipulation move is also known as a Judas swing. What we got? All right. So Market comes up, comes back into the range. Next candle opens up, starts out bullish, back into the range. Big bearish candle. Come back into the range. What we didn't do was we didn't sweep all the lows. 7 a.m. lows were down here at midnight open. So we still got room to go. What I like to look at this is
you should make it black. Or the color. It's the white lines.
Oh, yeah, I made one of them red.
All right, go you good.
This is 8:30 open.
So
so big red candle displacing back into the range, and we're just waiting. We're just waiting. At this point, if you want to hop into a trade now, that's on you. Feel me? It's cool. If you're that type of trader, you're a little more risky. Fucks with you for that. But me, I needed a little bit more confirmation before I jumped into this trade, which I did. But I waited until I got clear confirmation that we were going to go down and sweep these 7 a.m. lows. So, down, what do you wait for? Okay. So after this candle, we know it went red and came back. So what I look at this is the market priming itself and creating relative lows. Because we know the market is not just going to run in one direction at all times. We know it's not going to run in all directions all the time at no point in time. So what are we looking for? We're looking for the market to generate liquidity. That's exactly what this is right here. This is generated liquidity by the stock market itself, signed, sealed, and delivered. So boom, we generate this liquidity. We come back into the range. The market gets heavy again. We create a volume imbalance here. This is what I like to call. Well, this is what is called the first presented volume imbalance. Now, this is a very, very powerful Pediarate. We're not gonna get into that right now, but that's your first presented volume imbalance. Cool. I have that drawn for my teachings, for my knowledge. This is what I use in my chart. Everybody there. Okay, cool. So we get our volume imbalance. We get a big, strong red candle. This should be the market tipping its hand to you right here. That yes, we want to head in the direction of these 7 a.m. lows down here, which was at midnight open. So what we got? All right, let's move that one on. All right. So we got our volume imbalance. Market comes down. Big red candle closes all the way down here. Next candle opens up. Strong bullish momentum. We tricking people out the market right now. We coming back for all the buy stops that was just moved here. If we get a move like this, probably expecting the market to just come back up a little bit and roll back over and keep going. But no. We know what the market does at all times. If you know, you know. But I'll tell you now anyway. I'll give you a few seconds if you know to just say it out loud. Because we're getting better. That's what we're doing. All right. Cool. That's enough time. So the market does 4 things at all times. It's generating liquidity, which I talked about here. It's hunting liquidity, which is what we did with this green candle right here. And I'll explain that in a minute. It's rebalancing to an inefficiency, which will be a fair value gap, like this here. It's SIBI. Or it's rebalancing to equilibrium. I can't show you that now, but we'll get into that. All right, so back to order flow. We get a green candle. We push up strong for everybody who just moved their buy stops. from around maybe up here to in this area. And for everybody who just got in the trade, who was chasing the trade down here, buy stocks up here, y'all getting y'all last 8 up. Cool. So what does this green candle do? It comes up, it wicks the volume imbalance. Look at the wick. Look at it. So this candle, it went green. It was green, wicked the volume imbalance, came back, came down, closed underneath the volume imbalance, showing weakness in the market, showing that sellers are probably in control. Good signs if you short, bad signs if you just got tricked into a long with either this candle or this candle here. Okay, so after that, we get an open here, and it's just off to the races for the bears after that. We push underneath that 830 open right here with strong speed and aggression. You can see in this candle right here. We open here, push up a little bit into the lower quadrant of this wick right here. If you draw a fib on that wick, you'll see the lower quadrants. I can draw that for y'all. You can see here, in this candle here, we draw the wick because wicks are gaps. This is a valid gap.
Zoom in some more. Zoom in some more to that area.
Right here. I'm gonna delete this volume imbalance for a minute so y'all can see what I'm talking about. All right, so we draw the fib on this wick right here. I'm a little bit off, but it's okay. Okay, for everybody who want to be perfect. So,
delete the trading session. You see? Oh, right there. You see it? Oh, it's already sitting right there. No, just delete from right there.
Where?
In the corner, you see it's like trading session. Right
there.
Right at the bottom. Yeah.
All right. So we got the quadrants on this wick. This is 50% of the wick, 25%, 75%. As we know. See here. Oh, I got it backwards, but bear with me. All right, so that.
Just draw from highs up.
All right, so this candle closes here after we go up. It closes here. This candle opens up, starts out bullish, retest the bottom quadrant of this wick. And it's like, we ain't going no higher. Now it's off to the races. For the bulls, we're going straight into the sell side. Cool. Now, caught that play. That was nice. That would have been a nice little, let me see. Let's get my measuring tool. Caught that play. That would have been a nice little 35 points for you. Beautiful. All right. Let's get into the real move now. Because remember, our target was all-time highs the whole time. Right? Okay. So, after we get a sweep, right? This is where all you ICT traders should be interested. Right? After your sweep. Right? You're selling in
the fucking chat is not enabled.
Can I enable it?
With YouTube.
One moment.
Oh, it is. It's right there. But why? How do you Because they say I'm watching it. I want to type something in. Where would I go? Because it's enabled right there. I'm bad. I ain't gonna click. Because somebody want to ask a question, they can't talk. They can leave typing in. Oh, bam. this shit down. Keep going.
All right, cool. So, be back. All right, cool. So we got a sweep, right? 7 a.m. lows. Also, your midnight open, which is a strong reference point, right? So when I saw this in the market, I got excited because after I got this sweep and a touch of the midnight open in one, I was looking for bullish order flow. I immediately started looking for bullish order flow. Now, what does bullish order flow look like, Don? This is an excellent question. I love that, right? So boom. Bullish order flow, you want to see bearish things start to get disrespected. You can see that here. There's a bearish order block here. Market hit this, you want to see this take us lower. You want to see it stay in the lower half of this. If you're bearish, you want to see it hit this order block right here, which is this green candle. And you want to see it stay in the lower half. Let me draw a fair value. I mean, not enough of that. Let me draw a rectangle on that. Right? So you want to see this bearish order block be respected and stay in the lower half like this and take us lower. But what do we get here? Okay. Bearish come up. You see us retest this order block right here. We stand in the lower half. Lower half, that's good. That's good. That's good. But then what you get? Boom! Displacement to the upper half. You immediately don't want to see that if you bearish at all. But before we even get to that, let's get back into this bullish order flow, right? So after you get your sleep, you want to start looking for bearish PD arrays to get disrespected, which would be order blocks, fair value gaps, volume imbalances, things like that. You want to see those things start to get disrespected. You got a volume imbalance right here. That's bearish. I got disrespected here. That's a good sign. If you bullish. You also got one right here. See how the bodies don't touch? See how we got the bodies right here? This body is not touching this body. That's known as a volume imbalance. It's bearish because we're going down. It got created in the leg that was going down. So you want to see things like that start to get disrespected, right? We don't have a fair value gap in this leg right here at all. So we can't look for an inverse fair value gap here because there's no bearish fair value gap. So what do you rely on in this instance? Bullish order flow. You want to see bearish things get disrespected. You also want to see changes in the state of delivery. A change in the state of delivery is golden for you at this point because you got a sweep and now the market is changing the way it's delivering. It's changing from down to up, right? Now, let's explain what a change in the state of delivery is. For more advanced, students, or I don't want to say students. Let's say for more advanced traders, you would want to wait until you get a bearish candle in bullish order flow. So we're bullish, bearish, bullish, right? These two candles are very important in the change in state delivery because it's exactly what a change in state delivery is. Okay, so for more advanced students or traders, for more advanced traders, you would wait until you get a close above this opening price right here. See here? You're waiting until you get a close above this opening price right here. Now for me, I ain't that risky.
No, but Cody said, yo, it was good.
Oh, we giving out a master class in here right now. I ain't gonna hold you. All right, so for me, I'm a little more conservative. I'm a little more patient. And there's nothing wrong with none of that. So what I do is I wait for a close above this candle's wick. This bearish candle's wick, I wait for a close above it, which will validate a change in the state of delivery for me. Now, you might be wondering, why is it called a change in the state, Don? This is an excellent question. I got an answer for you. So, if you look here, as I was saying earlier, we're bullish, 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 bullish. What is the state of delivery here? If you say bearish, I'll show up to your house and I will step on your big toe. Cool. So we see that the state of delivery here is bullish, right? Because we're green, we're going up. The market is going up. So what happens here? We start to go bearish. We go down. We start going down. Why? How do I know that? Because it's a red candle. It went up. And then it came back down. Yes, that's what these wicks are in real time. And it closed here. It closed red, which means the market left off delivering to the downside because this candle was red, right? And it closed red. So in this instant, the market is delivering to the downside. Even though we're in bullish order flow, the market right here is delivering in. Don't think about nothing else right now. The market is delivering in to the downside right here with this red candle. Now, in order for us to change the state of delivery back to the upside, because we're delivering down, we have to close above this candle, this wick here. We have to close above this wick of this red candle. Do we get that? Yes. Does that validate this as an order block? Yes. A bullish order block? Yes. What do we also get with that bullish order block? A fair value gap. Very small, but this is now a high probability order block because we left a fair value gap.
What's the most important part of the order block?
I was just about to get into that.
Okay, because I want you to draw from open price to draw it.
I was about to draw a little color right here. Okay, so now let me give y'all some real sauce, right? This is something. What I'm about to tell y'all is something that you really probably not gonna find nowhere else for real. Right? So boom. What I just drew out right here with this trend line from the opening price of this candle to the high of this candle, what I just drew out was the most sensitive part of your order block. Now, what does that mean? That means you do not want to see no closes of price, no body closes. See how these bodies stayed in this range right here? There was no closes below this range.
You need to show the order block. You need the flip too to show.
Oh yeah.
Since you actually breaking it all down.
Yeah, that'll be an OTE too. And break down even further for y'all. Because you know we love these fibs. Right? So boom. Let's get this out of here. Let's clean this up a little bit. Just know that that's not there. Anyway. Act like that's that. Never let this shit beat you. Trust me. So anyway, let's look at this fib that we just joined this order block, right? You got your 25%, 50%, 75, and so on and so forth. So what do we get here, right? This order block is validated here with the close above and the fair value. So we get a break away from the order block, and then we get a retest of the order block. Let's look at the fib here. It's 50% range of the fib here. So it's 50. This is equilibrium of the order block. 50% of the order block. Equilibrium. Right? What do we do? Look at the bodies. See how none of the bodies close below equilibrium? Bullish. That's what it's telling you. So what do we get here? You get 1, 2, 3, 4, 5, 6, 7 minutes of consolidation. You could have entered at any one of these candles.
Wicks do the bodies.
Wicks your wicks gonna do the damage, as you can see here, but your body's gonna tell the story. You see how this green candle right here opens? Well, actually, it opened here. It opened here and immediately flew down to come scratch out anybody who went long around this area here. See that candle? You would have been okay though. You would have definitely been okay because this was only, let me see, from this wick, from this open to here, you'd have been just fine. That's a 15-point wick. If you enter anywhere in these candles, you'd have been just fine if your stop was at least 20 points.
At the low, which is at the low.
You could have put your stop at the low, which would have been 02, from 02 to, let me see the highest point here. Down to the low. Listen, that's less than a 25-point stop. I don't know what to tell you. If you're in one macro, you're risking literally $48. Your target all-time highs, which was 70. So look where you're entering the market. That's 50. That's at least 45 points to the upside. We'll get there though. Okay, so this order block, this bullish order block, is what you want to see support price higher. Does it do that? Yes. We create it, we go away from it, we come down, we retest it, the upper half of it. You want to see that. You don't want to see no body closes in the lower half. Below this red line, you don't want to see no body closes. That's showing you that you're bullish. You're about to go. Get your ticket and get on the bus. All right, so cool. We retest the upper half. Bullish, bullish. Red candle. You can apply the same logic that I told you here, as far as this being an order block and being a valid order block. Why? Let's delete this fib. Let's clean this up a little bit. Why is this a valid order block? I just told you. If we get a close above this wick, which we have here, that validates this as an order block.
These are other examples. Always count to the left. You see none of those closed above the prior wick. So that's why in none of those candles, there's no change in the state order block in none of those candles. You see what I'm saying?
And my mentor just brought up a very valid point, right? You might ask, okay, you see a red candle here and a red candle here. Why aren't these changes in the state? Well, it's simple. You don't have a close above any of these wicks. What did I tell you that we wait for? We wait for the market to deliver down. And then we want strong, aggressive candles above to close above these wicks to validate that the market is ready to go. Now let's look at a real life example right here. Boom. We come back to this change in the state. We go bullish because we get the change in the state. So now we're delivering down. The state of delivery is down, and then we change it to up, right? With this close and this fair value gap. So what do we do? We go up, come back down. We go up, come back down. And then we start delivering to the downside. The state of delivery is now to the downside, right? What do you have to wait for us to go up again? Oh. What do we have to wait for? For us to start going up again? A change in the state of delivery. Do we have that here? No. There's no close above this wick. So look what happens immediately after we don't get that close above this wick.
For people who anticipated it
to keep going up from here. If you anticipated it to keep going up from here, you probably got burned. Maybe. That's a small candle. Oh, I'm sorry. This is ridiculous. We literally died right here. Because we're delivering to the downside, guys. It's simple. We don't have a change in the state to delivery to the upside yet. So we're still delivering to the downside here. All of these candles, I'm still from here to here. I'm looking at this as bearish delivery. Delivery to the downside, me personally.
Actually, also, you got delivery downside until the old order block. So remember, an order block that trades inside of another order block turns into a what?
Does anybody know that? Because I know that. But what he's talking about is, and I really want to draw this area here. But I'm gonna let me see. What
you want to do?
I want to show the proportion block, which is here.
Draw. So use a square. The square. Start from the open. No, the open of the bearish candle to the top of the wick. Just right, and extend it. You see how it's all coming into the order block.
Okay, so I look at all of this as bearish delivery here until we get a change in the state to the upside, right? So this is where you display patience, because if you want the market to go up, you probably don't want to get in when it's delivering to the downside. You just never know how far it may want to go, right? Simple. All right. What we have here is another change in the state, but this one is significant because this is not only known as an order block or a change in the state of delivery. This is what we call a proportion block. Now, what a proportion block is when one order block is made from being traded into another order block, which was here. Remember how I said this was an order block?
Remember, every like 2-3 minutes, put it into the chat. Like, if you got any questions, you put it into the chat so I can answer for you if you don't understand something.
Oh yeah, perfect.
As long as I can keep going.
Yeah.
You got like 5 minutes in this right now.
All right, so back to the proportion block, right? You have an order block that traded into an order block, which is this blue rectangle here. Remember how I told you about the most sensitive part of the order block? Well, this order block right here traded into this order block. See that here? Traded into it. And then the next candle opens up, validating this order block with a close above and also a fair value gap.
Which is one of the highest probability order blocks.
That's your highest probability order block. When you get a close above with a fair value gap, that's the highest probability order block. Now, When this order block traded into this one over here, fuck all of these candles in between. When this order block traded into this order block, it became a propulsion block, right? You want to see that used as rocket fuel in the market, right? So if you see us push away from this propulsion block and we come back and retest it, you want to see that. You want to see the market just
do like what it did.
Do exactly what it did here, right here. You see how the propulsion block was created here?
You got any questions, man? Any comments? Anything you want to ask about? Anything you understand? Just write it into the chat.
I was about to get right into that. Right after I explained this propulsion block and how we ran away from it. So the propulsion block got created. We ran away from it. We came back, retested it. Boom. Big retest. But what did we do? We came right back into the range we was in.
Damn news candle.
Fucking news candle. 10 o'clock news. That's what this was. But all we did was come back, retest the propulsion block, come right back into the range. So we left the propulsion block and we decided to come back and retest the same fucking propulsion block right here. Look at the bodies. Look at the bodies. If I just draw this wick, if I just draw the wick of this propulsion block, the bodies didn't even care to come into it. Super bullish.
Yo, is it a flex the fact that I don't have to say nothing. You can just do it.
This is a massive hype.
You literally explain exactly the same as I would explain. That's a flick, bro. I ain't even gotta say that.
So now, what do we get now, right?
Wait, hold on. Somebody asked a question.
Oh,
do you mark up? He said, do you mark up on the charts pre-market?
Yes. But remember, as we're going along, none of this is created yet. None of this stuff is created yet. So as I'm going into as I'm looking at the market, I'm waiting for these things to get created. But not only to get created, I'm not only waiting for this order block to get created, I'm also waiting for it to get retested. So I need the market to first create it, and then I need it to come retest it to show me that yes, we want to keep going in the direction that I think that we're going in. Because remember, the draw was all-time high. We still haven't hit all-time high through all of this, right? So back to the propulsion block.
You good?
I just want to see if we answered the question correctly or good enough. All right. So what do we get, right?
If you got another question, just put it into the chat.
Yeah, if you got any other questions, put them in the chat. That's what we're here for. You feel me? Don't be. No question is a bad question. If you don't know, you don't know. That's what we're here for, to help. You feel me? All right. So what do we get? We get a retest of the same propulsion block that I just talked to you about. Right here. Boom. Right back into the range. We continue bullish. What do we get here? Another change in the state of delivery to the upside. Right? What happens? We come back down, we touch it, we respect it. It pushes us higher. And then we generate. What?
Delete that red line.
I'm gonna delete this the 7 a.m. highs here so we don't get confused with anything.
That shit already got swept.
Yeah, it got swept way over here, so we don't gotta worry about that no more. All right, so what we got, right? We got bullish order flow happening right in front of us, right? But again, we know the market is just not just going to retest and just go, right? So what do we have? We're coming right back to what I told you in the beginning. One of the four things that the market does, it generates liquidity. It did it here again, literally. So now we have a high here, and we have another high here. Relative highs, right? That's active liquidity. If we already looking for all-time highs to get hit here, which is this green line, if we already looking for that to get hit, and you see us generating liquidity in that direction,
Somebody had a question.
that's a good sign. Hold on, somebody had a question.
Yeah, I'm gonna draw liquidity for
Let me see. What do I mark up? Oh, what do I mark up on the chart? Pre-market. Okay.
We're gonna do that shit a little bit after.
I'm gonna come back to that. We're gonna go back to that.
That's gonna take us down a whole nother down.
Yeah, because that's a whole nother thing. We're gonna get right into that for you. But for CPI and PPI news, yeah, I don't trade during news at all. I just watch the market. It usually gives me a better confidence of what the market may want to do, because a lot of the times news will come out and sweep some lows or sweep some highs and come back into the range maybe and go the opposite direction. But it's all random. You feel me? It's don't quote me on that, because news don't always do that. It's so unpredictable. I just watch it, and then I'll take a trade after news. You feel me? That's nothing wrong with that at all. Protecting your capital like that. All right, so real quick, in the pre-market, right? I look at the highest high from 7 a.m. to 9:30. Well, 7 a.m. to 9:29. Because when 9:30 opens, I'm waiting to see what gets swept. So I'll mark out the highest high, which was here. This blue line, this blue trend line. That was the highest high. And I'll come and I'll mark out the lowest low, which was over here, which was at the midnight open. That was the lowest low. If I scroll out, you see that this is 7 o'clock here. Let me draw a, I don't know, 7 o'clock was here. That's this line. You got your lowest low right here. Lowest low right here. I can draw that out for you real quick. Lowest low here, and the highest high was up here. That's what I draw between, in pre-market. I also draw, a new day opening gap or a new week opening gap if it's close enough to price. But yeah, that's pretty much the model that I'm looking for, pre-market. So, I hope that answered the question.
So, okay, makes sense.
Okay, perfect. All right, so where were we? We had
the generating liquidity.
Oh, yeah, I was talking about the generated liquidity. Right here, right? So the market literally did the exact thing that I wanted it to do right here. Right? Because this is liquidity generated at 9:30. This is more generated liquidity at 10:10. What is this also? Relative highs. See how close that is to each other? That's relative highs right there. The market loves to come get relative highs. Relative and equal highs, strong magnet for the market. Depends on the context though. Don't just go to the market, see relative highs, and think it's gonna go up there. No, it don't always work like that. You gotta have context behind your trading. This is what we have here. We have beautiful bullish order flow. We have a bullish order block here, which is respected to the T. We love how that was respected. We ran away, created another bullish order block here. Also a proportion block, you can see here. Why is it a proportion block? Again, because we have an order block that traded into an order block. That's a propulsion block, an order block that traded into an order block. I'm showing you exactly what it is, guys. Order block, traded into an order block, ran away from it, came back, retested the propulsion block, and it was over for all-time highs and everything after that.
But hold on, show the price action before it went to all-time high. That's the main thing I'm trying to wait on.
Oh,
right when it retested the propulsion block.
Okay, let's bring it back a little bit, guys. Remember, we ran away from the propulsion block. We got bullish order flow here. And then you get bearish order flow here. Boom, 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 boom. What are we doing? We're coming back to retest a PD array in a discount for us to run higher. What do we retest? The propulsion block. The same one that we've been talking about. Now, you're not going to always get a propulsion block in your trading. This is not always going to happen. But these order blocks are very powerful signatures in the market.
Right. You get the order block, then you get inverse value gap right there. So just start from the pullback right there, from it, put it back right there. Yeah, okay. So now go from there.
All right. So we got a lot of important things that happened in this leg too before price took off. So we got to run down here, right?
Because we got to pull back to inefficiencies. That's exactly what it's doing.
The market loves like that.
That's why it's stopping. That's why I want you. That's why I kept drawing the line, because remember it generated it, right? So look, the market generated this high. Bam. We were supposed to take it. Why didn't we take it? Okay, cool. So we generated high. We come up, supposed to take it. We didn't take it. It started coming back down. So then what happened? We generated another high. Another generated high. Boom. So now we got triple highs. Why? Because look, we got all-time highs right here. Wherever the hell the all-time high is.
That's that way back there.
So now we got all-time highs. We got the 930 open high, and then you got this last generated high. So now what it did, the market, like he just said, the market just can't keep going up and up and up and up and up. Right? So look what the market did. Generated a high, pulled back into an area where what we're expecting it to pull back to, which is this new day opening gap, right? Which is this change in the state proportion block, right? So look how it pulls back perfectly, respecting this new day opening gap, respecting the proportion block. Look at the bodies, look at the wicks, right? Then now we're looking for bullish order flow again, just how we got it here. So he's expecting what he said. He's expecting bearish things to get disrespected. On this first leg down, remember, we're bullish. So anything that's bearish, I'm expecting to get used as an inverse, to get disrespected, right? So now, so we get the pullback. It's generated. Remember, the market got to do 4 things all the time. Generate liquidity, 100 liquidity. And then they got to do what? Pull back to an inefficiency, which is this, or PD rate, or got to pull back to what we said before, premium and discount of the range, right? If you use your fib, speed it up a little bit. If you use your fib, you go from this low to the high on where it was at. Look where it's so perfectly went to. Below 50% of the range, which is in discount, which is these are your best longs, right? This is your best longs. Then you get, so if I'm long, it pulled back to an area where I'm expecting it to bounce at. I'm not expecting it to disrespect none of these bullish PD rates that got formed, like he just explained. So now this bearish fair value gap, once it comes to it, I'm expecting to be used as an inverse to still go back to our draw on liquidity. Remember, our draw is still here. It never changed. This green line right here is the draw, is all-time highs, right? It's never been touched yet. So this 930 open, this did was come up just to sweep this high and generate more liquidity, right? Anyways, so we come up right here. So I'm expecting this bearish fair value gap right here to get used as the inverse. Why? Because I'm bullish. So look what happened. It closed right above, closed, validating the change in the state. I'm sorry, validating the inverse fair value gap. Then, like you said, I'm looking for bearish candle to support price higher, right? Bearish candle to support price higher. Don't worry about it. I'm going a little fast. I'm going to answer your questions in a second. Right? Now we get a bearish order block. Remember, we're delivering up, like Don said, we're delivering up, delivering up. Now we're delivering down now. Why are we delivering down now? Because it's a bearish candle. Bearish candles open high, close low. Bearish candle. Now we get another expansion away from it, creating a change in the state here. Once, remember, like you said, it got to close above the wick. Where's the wick? Right here. Where did it close above? Right here. So the most sensitive part of the order block is from here to there. Look what happened. Close, came back, retested the change in the state order block, rally, taking these highs, right? Taking these highs. Now guess what happened? Remember, this all-time high right here. So now look what happened. We create, remember, this is how you know when it's ready to expand past liquidity, when it leaves a fair value gap right through it. Like remember, this was a liquidity zone right here. This right here is a liquidity zone right here. This is a high. This is liquidity. Look how it leaves a fair value gap right here. See what I'm saying? Close up here, came down, create a fair value gap, came back into it. Remember, if I'm bullish order flow, I want to see it stay in the upper half of fair value gap, in the upper half of inefficiencies, in the upper half of PD arrays. Just how Don explained perfectly in all of these examples. Look how all these bearish candles supporting price higher. Look at the wicks doing the damage. But look at the bodies telling the story. See what I'm saying? So my bad. I was trying to hurry me expedite this process just to get to this part. You know what I'm saying? So now, look, sweep. Now look what happens. Remember, if all wicks on higher time frame for support and resistance traders, it's an actual. You're using all wicks, right? All highs and lows as support or resistance. So once you break above, remember, look. So resistance right here, right? So once I break above the resistance here, I'm expecting this to get used as a support now because old resistance turns to new support. So look how it's holding. Look how it's holding. Look how it's holding. Look how it's holding. It's liquidity. And then eventually, new change in the state. Rally, TP. Sometimes. So beautiful order flow. This is Friday's price action. Did a lot of drawing on this motherfucker. So his question was, is the breakers the main way you trade?
No, sir. Breakers are a very powerful PD array, but that's not the main way that I trade though.
And he said, what are your fib settings?
Oh, okay. Very simple. You take off everything except the 0.786, the 0.5, of course, and the 0.236. Take off everything except those, 0 and 100, of course. And you change the number to 0.75, and you change the other number to 0.25.
Okay. He said, what's your favorite model?
Ooh. That's a good question.
My favorite model is My favorite model is the favorite model. What's your favorite model? We ain't come up with a name yesterday of the
Yeah, we got to do it.
So they just said that's the favorite model right there.
Yeah.
Oh, yesterday probably the breakers though.
I'll be getting on them inverse fair values though.
What is consequent encroachment?
Okay. Get your notes down for this one, because this is it. It's a little confusing at first, but if you just stay in it, you'll get it. So consequent encroachment is the middle of any gap, is the middle of any inefficiency. that you have on your chart. So that could be a new day opening gap, that could be a new week opening gap, that could be a fair value gap, that could be an inverse fair value gap. The midpoint of all your gaps are your consequent encroachment.
Okay. He said, "What's a breaker block?"
A breaker block is a motherfucking cash cow. That's what the fuck it is. That's what it is. Let me tell you. I can't just.
Yes, you can. Yes, you can. Yes, you can.
Okay.
Try.
A breaker block. A breaker block.
Use your hand if you need to.
Okay. A breaker block in the market.
Use the arrow. So go to a blank spot. Go to a blank spot. Like like down there.
Oh.
Yeah, and then use the arrow. Like use the
like
more left, right about the path.
All right. So
show me a breaker block. Mm-hmm. Mm-hmm. Yeah, just do it and then just click it, do it, and then go fix it. Because you got it too up. Let it go, nigga. Just click it twice.
Oh.
All right, now there you go. Bye.
All right, so.
Yeah, bye. That's it.
All right, so a breaker block is when you have a formation in the market that looks like this. So you're gonna have it's always gonna be this. It's never not gonna be this. So it's always gonna be a low, a high, a lower low, and a higher high. Right? Now, what you should have in this leg right here.
Jackson middle screen. Yeah.
What you should have in this leg right here.
Oh, okay, sorry. Not too big.
What you should have in this leg right here is some bullish candles. Like it should be some bullish candles around up in this area. Should be. Right? 8 times out of 10, you will have some bullish candles here. Now what you do is you're going to draw out those bullish candles. And you're going to stem them. Oh my God. Bro, look how. I'm so good with the breakers. I even did it on a practice example that I just drew. Look at the bodies. Look at the bodies right here. I'm a clown. All right, so you're looking for the low, the high, the lower low, and what validates your breaker is your higher high right here. When this high right here gets closed above after you have a lower low, and you get a close above here, that validates it as a breaker, right? So what you want to see happen is you want to see us run. You really want to see it run away from the breaker, come back, retest it, stay in the upper half of the breaker. You don't even want to see the bodies close below here, and then you want to see it, run away.
All right.
So that's what a breaker is. It's a low, a high, a lower low, and a high high. That's what it is. Low, high, low, low, high, high. That's a good question.
Mm-hmm.
You can make a comment, my boy.
Mm-hmm. Mm-hmm. So you got some good questions. Look like you're typing right now. Yeah, but that's definitely.
Breakers also occur on higher time frames too.
So now I'm gonna break down the SMT. So this is my favorite model, right? Favorite model is when. So we got a low, we got a high, we got a higher low, higher high. Let's say this is ES. This over here is ES, and then this is gonna be NQ. So NQ also makes a low, a high, but NQ makes a lower low. This is right here. See how I made a lower low? This low is lower than this low. And then you see this low is higher than this low. So this is an SMT divergence, which is a SMT stands for smart money technique, right? This is a sign to let you know that, okay, this low is the protected low, right? So once you catch this low in this little small range, it should be a bearish fair value gap, right? So that's the first thing. You're looking for the SMT. Now you're looking for on the first leg, you're looking for any inefficiency to get disrespected, to get used as a bullish, as an inverse, right? Usually 7 times out of 10, once it comes up, we'll create a change in the state in this area. So we get a change in the state, and then you get the close above, validating the inverse, validating the inverse fair value gap, and then same thing, retest, runs over. That's the forever model. So you're looking for a change. You're looking for SMT, change in the state, inverse value gap, target the nearest liquidity to the buy side. Same thing for shorts.
It's also called the S&T divergence.
Oh yes.
S&T divergence.
Because it's a divergence between two assets
that are closely correlated.
Yes, which NQ, which is the Nasdaq, ES, which is S&P 500. Those supposed to move
the same.
The same.
The price is supposed to move the same on both of those. So once you see something like that happen, that's called a divergence, because one of them did something and the other one didn't do it. So it's a difference in the markets at that time.
He said, how do you feel about fibs? Do it really work?
Hell yeah, fibs fucking work. Well, some people use fibs for entries, okay? I put it this way. I don't use fibs for entries, but some people use fibs for what's called an OTE, which is an optimal trading entry, right? I don't use it because I use other things like order blocks and fair value gaps, stuff like that, or inverse fair values to enter the market. But yes, fibs work. They can work for entries, but I don't use them for entries though. I don't use them for entries. But I do know what the OTE is and stuff like that. I just don't use it.
Oh yes. He said, "How do you find liquidity?"
Finding liquidity is really a higher time frame type of ordeal. What you want to do is you really look on your higher time frame to see. Yep.
Remember, liquidity is always highs and lows.
Highs and lows.
So highs and lows.
If you look in this range right here, this was liquidity that hadn't got swept yet. It came down, came back up and swept it. This is acting as liquidity. This is acting as liquidity. This is making higher highs right now. If you look right here, these lows right here, all of these lows right here was active liquidity until we came back, until we came down and swept it right here.
He said, "What's an order block?"
I can actually check it right here. An order block is where you have a series of down close candles right here, followed by a series of up close candles that closes above the highest down close candle in the leg. So
he said, so basically like a change in the state.
Yeah, order block is a change in state delivery. Same thing.
Yeah.
It's the same. It's the same thing. Yeah. Yep. But you see how I closed above this last up close candle right here, over here?
What kind of people use it? Draw it up and put up.
I'm about to draw this order block for y'all so we can see how price uses it over here. I see it already. But I see that. These order blocks will tell you a lot in the market. Don't think I keep saying this shit for no reason. I'm trying to get y'all some motherfucking money.
He said, what's mean threshold?
Mean threshold? That's equal. Your mean threshold would be delete the whole chart. Okay. right. So mean threshold. This is why I said consequent. Write down consequent encroachment in your notes, because mean threshold is the middle. Let's say it would be the middle of like an order block, right? So you could draw. Let's say you drew out this whole order block right here, right? Like from the wick to this opening. Well, you have to draw it literally.
I like how you put that one up.
What?
What you did?
Oh, shit. I had to try some shit. All right, so if you was to draw out this whole order block, right, from the high of this candle to the low of this candle, and you saw that it was validated, right? Because we closed above it, and we got a fair value gap with it, right? So this is a valid order block right here. These three candles. So if you draw,
The block you did.
shit, damn, I could do it.
It's cool. It's what we learned. This is practice for you. You're practicing. You could do nothing wrong right now.
Let me actually draw a fib for y'all around that, right? Show y'all what's going on. I'll do it backwards.
It's cool. 50% still right there.
Either way, right? So boom, if you draw this whole order block right here, right? This series of down close candles, because that's really what you're supposed to draw if you're drawing an order block.
And then after that, he says, how do you enter off an order block? So just explain the mean threshold and how would you enter off the order
I
block?
can already show them right here because it's already in the example right here.
Keep on.
All right, so boom.
Put it what's going on when you're ready.
I got you. All right, so boom. Your mean threshold would be the middle of the order block of the series of down close candles from lowest point to highest point. The middle would be your mean threshold. Okay, that's for things like order blocks, right? They were classified as mean threshold. The middle would be a mean threshold. Now, to enter off an order block, what you want to see is the order block be created, be validated. You feel me? Which is where it closes above. This is a strong order block because we have a fair value gap right here, right? With the close above. So you want to see it leave it, come back and retest it, right? But you don't want to see no body closes in the bottom half of your order block. This goes for any order block. I'm on an hour time frame right now, right? It don't matter what time frame you're on. You do not want to see no body closes in the bottom half, the bottom quadrants below 50% of order block. Thank you, appreciate it. But that's what we're here for. I just want to see you be good, G. So anyway, be good, be a good trader. So anyway, look at your bodies when we get to the order block, right? Look at your bodies. Your wicks are doing the damage, right? Your wicks are doing the damage. That's why you got to wait for candle closes, right? Because wicks will kill you. Wicks will kill you. I'm telling you, all day they will kill you. So you have to be patient, right? Wait for the market to show you that I'm done wicking this order block and I'm ready to go, right? So how can you know that? If you see the market come down, right, and we retest an order block, and then we make another order block, we make another change in the state coming out of that.
That's a pushing up on an hour time.
It is. It actually is. I just thought, but I'm not. We won't be here too long. I want to
bro, just show the entry and we get up on that.
So if you see the market come down and retest a PD array, right, which we retested this order block right here, and then we got another change in the state going to the upside, and you was already bullish, wait for a retest right here. A retest of this next change in the state, boom, get in, and you're good to go.
Risk reward, put it right quick on the screen so you can see it. What would your stop loss be, where your entry be?
Let me show you, let's down there. So boom, let's say you entered, let's say you was a little patient and you waited for this retest of this order block right here, right? My G, you could literally, if you wanted to, put it a few points below this order block. And look, this is an hour time frame, right? This is an hour time frame. So if you would have swung this trade, you would have made 163 points, right? But it works on every time frame. It don't matter what time frame you're on. This is valid. This is an hour time frame, and you're risking 26 points, my G. Because why? Your stop could literally go underneath this order block right here that was created to the upside, that got retested twice, and then we got up out of there. It actually got retested 3 times. Well, you'd have to put it a little lower.
He said, what was the reason what was the 4 reasons the market moved again?
The 4 reasons why the market moves. I can give you examples. Well, let's say you would have been risking 36 points. If you swing it, you'd probably be risking something like 40 to 50 points anyway. You feel me? But if you really wanted to be safe,
the lower the candle. Keep going. You could write about the lower of that candle. Right there.
Which candle?
See, it's to the left. Keep going. The red line. Oh. Right there. See the wick? It's a wick right there. Not the long one. It's a wick right there.
Oh, you're talking about this wick right here?
Yeah, let it go. Look, this wick right
Yeah.
here.
I was.
This is not a wick. This is just the line. That's
what was confusing me.
Yeah.
I was like that one. So if you really wanted to be safe, you could really put your stop here. But this would have been a swing trade. You're risking 93 points, and you could have just targeted.
He said, "What are some helpful tips for me to pass my evaluation this week?"
You know what's crazy? You're asking a very, very, very knowledgeable person right now, because I just passed 2 in the past 2 weeks. 100K funding right now, nigga. All right, but cool.
Tips, key helpful tips for that boy.
I would say, okay, it's better to be late on a good trade than to be early on a bad trade. Now let me explain that to you, right? Let's say you're waiting for this to go up, right? You're waiting for the market to go up, but you're not sure, right? So you see it here, and you're like, okay, I think it's gonna go up. You miss this, and you're like, okay, I still think it's gonna go up, right? But you don't get in. But you come here and you see this candle come down with the market and then go back green, you can get in there. You're late. Yes, you're late. But at least you're safe, because you already know the market shouldn't even come back down here no more. Wow, we already retested everything that we already did everything we needed to do down here. We generated liquidity. We retested an inefficiency, which was here. We generated liquidity. We came back. Let me take out this fifth for y'all real quick, because it's a little. We came up. We retested a very small inefficiency here, which is a fair value gap. Got retested. So we generated highs. The 4 things the market do: generated highs, retested an inefficiency, which was this blue line, this blue rectangle got retested here, swept liquidity, hunted liquidity, which was this here, liquidity got hunted, all that shit got swept, hunted that, and the last one is we rebalanced to equilibrium, which would be, you could draw out like a casino did earlier. If he was here, he drew out this range from this low to this high. Now, in this range, well, actually, we'd have to do it from a range back here, wouldn't it? Well, I could just show you. The market created a range, and it came back and retested equilibrium.
Not from that high. You see, you drew to that high over there. See the high bound. It came close to the red line. Now just leave it. Go back to it. It's great. Bound. Go now. Follow it all the way down. Follow it all the way down. all the way down. When you say it can't close, that's lift it up a little bit. When you say it can't, it tried.
Yeah.
So
it tried to come back and retest.
That's the retest of that's the retracement back to equilibrium.
Yeah.
Like, it don't gotta get there all the time. It gotta at least make an attempt. And the fact that it's not willing to even go down there to hit equilibrium of the range, that's showing signs of the shorter flow.
Yeah. But see, if you draw out the range, which was this high to this low, the 50% of that range is equilibrium. That's one of the things that the market like to do. It likes to retrace to equilibrium. How about I say rebalance?
And then rebalance to retrace to equilibrium, and then it rebalances to inefficiencies. But can it be? It could be both. Could be retraced for both, right?
Rebalance equilibrium.
Is it? Or is it?
I actually could say that.
Retrace to equilibrium. The same tree.
Yeah.
Retrace, rebalance. It's still retracing.
Yeah.
He said some more helpful tips also.
Besides
the waiting.
I would say don't rush it. You feel me? If you feel like you're late on the entry, just wait for the next trade. It's coming for you. Are you close? Are you close to passing, or do you still have a little ways to go? We can actually go further.
Yeah. So some helpful tips. So I'm gonna give you some helpful tips for me. Helpful tips. Don't have an ego in your trading shit. Like, don't just because you on the verge of passing and trying to pass it, don't use that like, oh, I know this shit for real. Like, just fall in love with the journey, bro. He said just bought in 50. He said he had 51 right now. He said I made 2,000. Copy. Let me tell you, copy my trades. Copy my trades, G.
You trade live every day. Man.
We trade live every day, G. Nah, but the same way how you made that 1K, bro. Remember, less is more. Real shit. Less is more. You don't want to over trade.
Please don't over trade right now.
You want to trade less. Less is more, bro.
Protect your capital as much as you can.
So let's say you take one trade. That trade was a banger. That's it. Don't trade no more.
Don't trade again today.
Don't trade again, bro. That's it. One and done. Think about like basketball, any sport. Every single time you shoot a shot, they say you go they say you make the first shot. If you shoot another one, your chances, like, what's the chances on you making the second one? It's not 100%. So why would you risk more money that you just won? You know what I'm saying? The problem is it's the greed. We want to make more money.
You want to pass the account.
You want to pass the account today. You want to make. You know what I'm saying, bro? I'm trying to tell you from nigga that really do it for it, bro. Like,
I do shit every single day.
Just take your time, bro. Like, but you got to be quick too, because you got 30 days. You know what I'm saying? But just keep doing the thing that you think is gonna work, and the things that don't work, stop doing them. You know what I'm saying? Anyways, I'm out of here. I'll catch y'all boys on the next one. I appreciate, man. Round of applause for my dog Don, man. He done broke down. Nigga done spent. We was on the bitch for 2 hours breaking down Friday's price action. God damn, we didn't even get the damn Thursday, Wednesday, Tuesday.
Nigga, got a question. I'm trying to help the people, man. If I don't get there, I don't get there. We'll break down
this nigga spent 1 hour and a half on 30 minutes of price action. Yo, you spent 30, bro, at least an hour and a half, bro. This live been like an hour and a half, bro. Real shit.
That's the beauty of it. That you could like break something down. So
all you did from 7 o'clock to 12 is all you did. Anyways, I catch y'all boys on the next one, man. I appreciate y'all boys for tuning in. Appreciate Don for teaching the class today. Another thing I want to let you cheat, an hour and 20 minutes. You know one thing I want to tell you? It was me asking you all the questions. He jumped in and asked like a couple of questions, but it was me actually the equilibrium and the look at the liquidity. What's the 4 reason? He put what are the fib? But I was like, how do you use the fib? Like I was like joining on, and then but he actually asked about the helpful tips to pass the account.
Well, that boy asked a hell of a question.
Yeah. But you see all the other questions, it was me asking. You know what I'm saying?
But still,
no, definitely. He definitely.
Like, you basically piggybacking off like it's
type shit.